take this point forward itself, and in light of that, what does it do with their investment portfolio? Dean Cain, Head of Global Research Product at William O'Neill, joins in now. Dean, good morning. Just wanted your thoughts on, the question that was posed by Steve. How long and not how high the inflation, and what happens to the Fed from here?
Yeah, I mean, inflation certainly is very, very persistent and stubborn. The problem is in two areas. One is the service sector and also shelter. We continue to see strong real estate prices and service that continues to be quite strong. Today's action was not comforting as both S&P and NASDAQ downside reversed, and they're now below the 50 and 100-day moving averages. And thirdly, I would say the U.S. Treasury bond auction that went on this week, the demand was weaker than expected, prompting the yields to elevate. So certainly, not a good setup after today. We do expect a little bit of a downside. In the meantime, the breadth of the market has made some improvement in the last couple of weeks, but so far only 33% of the New York Stock Exchange stocks are above the 150-day moving averages. And so we may see breadth continue to narrow in the coming days due to the poor index performances today. So that's what's going on today.
All right. Dean, a few days ago when you joined in, you were telling us that you expect, I think, the U.S. bond yields to move a little bit higher from here, maybe move towards around 5.25% odd. We were cheering earlier this week that we saw it cool off to around 4.5%, but overnight again it spiked up. How do you see that one moving?
Yeah, I think, we're kind of in a gray zone at the moment. The next resistance is at around 4.8, which was the previous peak when we spoke. And after that, it'll go straight to 5.25. So given the hotter than expected CPI print, I think there's a greater probability that we will surpass the 4.8 and potentially move towards 5.25. Certainly, the dot plot would suggest that the market is expecting one more rate hike. This may come in November or December. It would be a very welcoming positive surprise if the Fed were to come in and say they're going to pause for now. But looking at the CPI print numbers, I think we should brace for another rate hike.
You're saying the U.S. 10-year yield can head immediately to 4.8% and then eventually to 5.2%. You're expecting some downside in the U.S. markets. How much more? U.S. markets have already slipped 5, 6, 7% from their 52-week highs. How much lower do they head?
Yeah, right now, the S&P, for instance, they're below the 50 and 100-day moving average, but there is some support at the 10-day moving average, which is 1% below. So given the strong performance of the mega cap stocks, I wouldn't be surprised if we do find support there. And we'll see what happens with bank earnings tomorrow morning. And if we get some, really bad print, that may send the signal to the Fed that they ought to be easing or stepping back from the hawkish view, particularly for smaller regional banks. They have yet to report, but we may see pretty poor performance from regional banks, and that may tell a story in terms of what's really going on in the economy. And so we do see some support at 1% below here. And, it would be a good sign if the market can bounce. And like I said, the mega caps, tech stocks in particular, they're acting pretty constructively at the moment.
Well, the question is then, for all of this that happens in the globe, what happens to India? The Indian markets have been extremely resilient, and for good reason. Your thoughts on how long this resilience can continue? And in light of the global uncertainty, do you think India will continue to be, the place to be despite the valuations?
Yeah, I think it is. We're looking at charts technically with a fundamental view. It certainly helps that the oil price is kind of stabilizing and coming down. And the U.S. dollar is, coming down a bit as well. U.S. dollar may edge up because of rising rates. But given the fact that both oil price and U.S. dollar has been some sort of an issue for Indian market in the past, but I don't see a particular spike in those two areas. And coupled with that, the fundamental drivers for Indian companies are quite strong. You have very strong domestic demand as well as export demand as well. So it's not uncommon to see, stocks growing 20% in earnings. And so I think Indian market will continue to be very resilient.
Yeah, Dean, you had a view on the Indian IT names as well. I think you were leaning more towards the mid-cap IT stocks. You can correct me if I'm wrong. But I also think that you had said that large-cap IT is now looking constructive. Last couple of days, my colleague Rima was telling us these numbers have been a little bit weak and the guidance is even weaker. What's your view on the IT names?
Yeah, I mean, they were looking pretty constructive. But now, given the fact that, we may see another rate hike, and we may see, implication of that is, slowing economy in the U.S. So it may take some time before we see large cap tech stocks like, Infosys and Tata Consultancy to, break out and outperform. Just today, Accenture, was down quite a bit. So I take cues from that. And, now we're seeing some, headwinds for large cap Indian names.
What about other names like HDFC Bank, Reliance Industries? Now, both these two stocks have been big drags on the market. Fundamentally, all the people we speak to seem to suggest there's nothing wrong. In fact, these are good long-term buys. But technically, they appear to be pressured. Do you see some upside constructive positioning in HDFC Bank and Reliance Industries from here?
Yeah, I mean, from our perspective, we're looking at the charts from a technical basis. We do see a lot of resistance for HDFC Bank. They're going to have to work through a lot of resistance levels. But on the flip side, I do see a lot of interesting financial names in India, particularly in consumer finance. So, for instance, L&T Finance, Cholamandalam, Bajaj Finance, Equitas Small Finance, all of these companies are doing great. And then on the public bank side, that appears to me to be more interesting, particularly Federal Bank and Bank of India. They're just breaking out from early stage basis. So I would focus on these names. I think the large cap private banks, they have ways to go before they can work through those resistance levels.
All right. Finally, before we let you go, your thoughts on the consumer sector in India, Dean? Because, rains were a little deficient in the month of August, perhaps some bit of September as well. But the second half, people are looking at some recovery because of the festive season. At the valuations at which they trade, would you dabble into any of them?
Yeah, I mean, for instance, Varun Beverages look great. EIH, Wellspun India, Sarah Sanitary Ware, Amber Enterprises. These are all names that are just breaking out and ready, to go higher, in my opinion. So I think these are the names to focus on.
Always good speaking to you, Dean. Thanks so much for stopping by. Wishing you a good Friday ahead and appreciate your comments as always.